CMHC has become a scam. There, I said it. Hey there, welcome back to Bald Prairie Real Estate. My name is Matthew Pfeifer, real estate agent in Regina. That's my trusted assistant. This is the weekly news recap where I go through Canadian real estate related news topics and give you my thoughts and opinions on it. We're going to be going through the first-time home buyer incentive plan that's now canceled, talking about mortgage delinquency rates, going to look at a affordable housing program that the government is so excited about. We'll give you the monthly rental report and how I think CMHC has become nothing more than a tax scam. But it wouldn't be a Bald Prairie Real Estate video without another terrible bad dad joke, so here you go. How do you get a Kleenex to dance? You put a little boogie in it. If you have a terrible joke that I can use in a future episode, put it in the comments below. Let's get into this week's Canadian real estate news. We're going to start off by talking about how the first-time homebuyer incentive program has been canceled. Real quick pause here. If you're thinking about buying a house in Regina, obviously I'd love to help you out. But if you're somewhere else in Canada, don't worry. I can get you set up with a perfect real estate agent that I'll handpick for you. If you check out the description of this video, you're going to see a link to my calendar where you can book me in for an agent recommendation consultation. I'll give you a call, learn about what's important to you in a house, in a real estate agent, and I'll get you set up with that perfect agent in your market. And now let's get back to the video. This program was introduced in 2019 by the federal government as a way to make housing in Canada more affordable for Canadians. The idea behind the program was that the government would essentially loan Canadians an additional down payment. So if you had a 5% down payment for resales, they'd loan an additional 5%. If it's a new construction house, they'd loan up to 10% as long as the down payment wasn't more than 19.99% in total. You still had to pay those CMHC premiums. We're going to be talking about CMHC in a second here, but in exchange for the government's money, they took an equity stake in your house of an equal amount. So 5% for resale, 10% for new construction, and that loan had to be repaid when you sold the house or 25 years, whichever came first. And what would happen is you'd repay the government 5% or 10% of the value of your house at the time of that sale or 25 years. And the government got to basically pick who did the appraisal, so they're the ones that are going to pick what the value of your house is and how much you're going to owe them. I said at the very beginning, I didn't think this was a very good program. The government expected 100,000 applications, and they got less than 16,000, so it seems most people agreed with me that it wasn't a very good program. I actually made an entire spreadsheet. I did a video on this, outlining different scenarios where this program maybe made sense and where it didn't, and basically it boiled down to 3 criteria. If you felt your house was going to increase in value, if you're going to be doing renovations to your house, or if you're going to be in your house long-term, don't take the program, because it would end up where you would pay back the government significantly more than you borrowed and more than the savings you would get from the reduced interest you'd be paying because you had that larger down payment. And again, it seems like most people agreed it really wasn't a good program. It didn't help anybody actually qualify for mortgage. So if you didn't qualify, you didn't apply for this program. So really all it did was slightly reduce the interest you paid. That's about it. They haven't really replaced this program, and I'm okay with that. They have now the first home savings account, which is a much better idea. Not a perfect solution, but it's a much better idea than this incentive program that they offer. Next, we're talking how mortgage delinquency rate is soaring in BC and Ontario. This was a great headline, and it's also very misleading. Now, there's a lot of numbers here, so I'm gonna have to look down a couple of times to reference numbers because I've forgotten half them as I'm going through this. But yes, mortgage delinquency rate increased in Ontario 135%, and it went from 0.11% to 0.12%. In BC, it increased 65%, went from roughly 0.13% to 0.14%. Nationally, mortgage delinquency rate is 0.18% up. Last year was about 0.15%. Okay, lots of percents, and there's some additional context I completely forgot here. The pre-pandemic level, 0.3%. That's all mortgages in Canada. Last year, starting the year, there was approximately 7,000 mortgages that were delinquent in Canada. Now it's up to about 9,000 mortgages of 5 million in Canada. Typically, about 50% of homeowners that are delinquent on a mortgage will actually end up in a foreclosure situation. Banks don't want to take back people's houses. They want to work with them and keep them paying that mortgage. But let's just say, for argument's sake, 100% of all these delinquent mortgages turned into foreclosures. So about 9,000 additional listings added to the approximately 450 to 550,000 total transactions that happen in Canada, or approximately 700,000 to 1 million listings in Canada. This is a drop in the bucket. And I know a lot of people have tried to equate this to the United States 2008 financial crisis with all the subprime mortgages. Yeah, that's just not a good analogy at all here. Even today, the mortgage delinquency rate in the United States, like right now, is about 3 to 5%, closer to 3% right now, but that's where it hovers around. The mortgage delinquency rate for those subprime variable rate mortgages, those teaser ones that everybody talked about right before things started to go bad, was 35%. Again, nationally in Canada, 0.18%, the pre-pandemic level, 0.3%. Trying to equate this to what happened in the United States, I think it's just utterly ludicrous. I do expect we're going to see mortgage delinquency rate increase steadily. Will it get above pre-pandemic levels? We'll have to wait and see. But we're not even at that level yet. So we have a long ways to go before we get to anything close to what happened in the United States in 2008. Let's talk about what the government of Canada deems as an affordable micro apartment in Victoria. This article and this announcement by the government, specifically our finance minister, to me just shows how completely out of touch our current government is and how completely clueless they are with how bad the housing crisis is in Canada. They went out and announced how this was an awesome affordable housing project that was going to provide housing for people in Victoria at affordable rates. And their determination of affordable is a property that costs almost $1,700 a month for a 330 square foot micro apartment. Like, are you kidding me? That's what we're now calling affordable now? Now, this was built under this affordable apartment construction loan program, and where the money came for that, we're going to be talking about that in just a second here. But essentially, the government has a formula for affordable, basically 30% of the median household income. As long as rent is below that, it meets the affordable threshold, and the government will provide the builders some construction loan money, and there has to be 20% of the total units have to be affordable. The rest of these units in this project start at $2,400 a month for a one-bedroom apartment and go up to about $3,500 a month. Again, the smallest, most affordable unit in this entire building is 330 square foot, and that's what the government deems is this is an awesome place for people to live. It's so affordable. The finance minister even said that people from the prairies, when they go to BC, feel like they've died and gone to heaven. BC's great. I love BC, but no, sorry, not true. And while we're talking about the price of rent, let's look at the most recent rentals.ca rent report. It's not very often I get to say there's good news in the rent report, but this month we saw a month-over-month decline in rent, 0.1%. It's still up 10.5% year over year, and it's about $2,200 a month on average to rent an apartment in Canada, according to rentals.ca. And since we were just talking about Victoria and their affordable housing, well, according to rentals.ca, a one-bedroom apartment is $2,100 a month, and a two-bedroom apartment, $2,750 a month. Again, this project that was supposedly affordable starts at $2,400 a month for a one-bedroom apartment, except for the affordable units at $1,680 a month. And this is ludicrous. Vancouver was the #1 most expensive place to rent in Canada. Surprise, surprise, it's been like that basically forever. $2,650 a month for one bedroom, $3,500 a month for a two bedroom. It was, though, not only a month-over-month decrease, a year-over-year decrease for both of those categories. My hometown, Regina, Saskatchewan, was the second most affordable place in Canada to rent. $1,250 a month for one bedroom, $1,400 a month for two bedroom. That was up, though, 19% and 14% year over year. The price of rent in Regina has dramatically increased over the last year and a half, 2 years. It's actually pretty staggering, blowing me away. Saskatoon was the lowest, $1,180 and $1,390 a month, respectively. That surprised me. Typically, Saskatoon has been more expensive to rent, and it's more expensive to purchase there. So that was a little surprising, but across the board, the prairie cities continue to be the cheapest places in Canada to rent, and they have been so for a very long time. Now, when we look at the price trend here, I'll put up a chart for you. Generally, we see that rent increases through the spring markets. Kind of the bottom is that January, February, March timeframe, and then it'll start working its way back up. So we're gonna have to wait and see if this month-over-month decline is a 1 month thing because it increased the previous month, or if we're gonna see some sort of flattening on the price of rent in Canada. My guess is probably not. Now it's time to talk about CMHC and where those insurance premiums are actually going. This is going to end up being a little bit of a rant, but I think it's a very important topic that has been completely neglected in the media. Nobody's really talking about it. And it's something that I think everybody involved in this should be utterly ashamed and embarrassed that this is what they've turned CMHC into. So quick little refresher. What is CMHC? In Canada, if you have less than 20% as a down payment, you have to have mortgage default insurance. That's mandated across Canada. CMHC is one of the providers. They're a Crown Corporation. There are two private companies as well, Sagen and Canada Guarantee. And the smaller the down payment, the larger the fee is. And those fees have changed over the years. And that's going to be kind of the source where we start this rant and this argument here. So in 2015, the CMHC premium on a 5% down payment was 2.15%. That gets added to your mortgage, and then you pay interest on that for 25 years. Obviously, that adds up really quick. In 2015, in 2015, it was 2.15. They increased it to like 2.45. And then in 2017, they increased it to 4%. And the rationale behind this increase was that CMHC needed to ensure that it had enough capital should the market turn sideways, and they need to ensure all of these mortgages have gone bad. Okay, I get the logic. I may not agree with it, but I understand what they're doing. But this took a 5% buyer, and say you spent $499,000 because that is the largest purchase you can make as a 5% down payment. Well, your insurance premium went from about $10,000 to almost $20,000. So a $10,000 increase added to your mortgage that you pay for 25 years. But here is where things start to get juicy. June 2017, all of a sudden CMHC says, hey, we've got all this extra cash. We've got more cash than we need to cover off our liabilities. So instead of reducing the premiums, or maybe how about giving the money back to the people you took it from when you said you needed it? No. The federal government decided that CMHC was going to, for the first time ever, provide a dividend. Again, this is a company that was founded in 1946 that has never paid or had never paid a single penny in a dividend to the federal government. But in 2017, the federal government decided it needed this dividend. Again, CMHC says they had this extra cash and they provided the government. I don't believe that for a second. This is, I think, a government that realized, hey, CMHC's got a whole bunch of money that we can take from them because they're a Crown Corporation. So CMHC provided a $4 billion dividend to the federal government. They didn't give the money back to the people they took it from. They gave it to the federal government. And it wasn't used for housing, to create more housing. No, it was given to the federal government's General Revenue Fund. And since then, the federal government has received nearly $20 billion in dividends from CMHC. They didn't decrease their premiums. They took this money, which is predominantly from first-time homebuyers, these people that are scraping together every single dollar they can to get in the market. This might be somebody just like you. And now they're taking these insurance premiums that are, again, supposed to be to backstop the mortgage market, and they're directing these funds into the federal government's General Revenue Fund. $20 billion. Can you imagine how much housing that would build? Now, since then, in 2023, the CMHC announced that they were going to reduce, not eliminate, reduce the amount of dividends they were paying to the federal government. It's only going to be about $250 or $300 million they were going to give the federal government at the end of 2023, and they're going to use the rest of the money for creating affordable rentals. Okay, but they're not providing grants, or they're not building these affordable housing units. No, they're going to provide loans. This is part of that apartment construction loan program, the one that the government is talking about using for affordable rentals, $1,700 a month in Victoria for an affordable micro apartment. If somebody applies for this construction loan program, that's basically where this money is coming from. So first-time homebuyers, again, people who are scraping every dollar they can to get into the housing market, are now being taxed by CMHC, and that money is then being loaned out to construction companies at very generous rates. Geez, it's interesting that you're going to give very generous rates on money that they took from first-time homebuyers. And of course, the first-time homebuyers are not going to see a single dollar of the interest that the CMHC is going to collect on these loans. That's going to get put back into CMHC and probably then back into the General Revenue Fund for the government. So now CMHC, instead of providing affordable housing or helping and assisting Canadians in getting affordable housing, has become a tax scam. They're taxing first-time homebuyers. It's now become a tax to be a first-time homebuyer. You have the privilege of paying this tax to the CMHC, which is then going to provide the money to the Government of Canada's General Revenue Fund, or it's going to be loaned out to construction companies at very generous rates. You're not going to get any of the interest. This is disgusting that the people involved in this seem to think that this is completely acceptable. If you want to make housing more affordable in Canada, reduce taxes and fees. Why don't you reduce CMHC fees? If you have all this extra money that you can just give to the federal government, why didn't you reduce your fees? And that to me is so frustrating. I'm going to put all the links to all these articles that talk about this, but if you notice, they gloss over all of it. Nobody seems frustrated that the federal government is demanding essentially CMHC dividend them billions of dollars of first-time homebuyers' money. Nobody seems to have a problem with it. And to me, that is absolutely frustrating as all heck that this has somehow become acceptable. So if you're a first-time homebuyer, maybe you just bought a house recently, or you want to become a first-time homebuyer, you're paying a tax for that privilege to be a first-time homebuyer now in Canada.